London, the capital of the United Kingdom and one of the world's most important financial centers. With a GDP of £500 billion, the city is by far the country's largest economic and cultural hub and a global tourist destination. However, the capital faces challenges that threaten its prominence, as despite being one of the richest cities in the world, social inequality is rapidly growing, driven by the housing crisis, high demand for real estate, and the extremely high cost of living. At the moment, London is on track to become one of the most unequal cities in the UK, where the poorest half of households hold only 4% of the wealth, while the richest 10% own more than 60%. This economic and social decline also affects its global status, as it was overtaken by Paris as Europe's largest stock market in 2022. In this video, we will analyze the main factors that led London to this crisis and how it weakens the city's prestigious status. In this sense, to understand the current situation in London, it is essential to examine the past of the British capital, its foundation for development, and its evolution as a global city. For this, we must go back to the 16th century, when the city experienced prosperity through maritime trade, especially after the establishment of the East India Company in 1600, which not only solidified London as one of the world's largest commercial centers, but also directly influenced the course of the United Kingdom with the expansion of the British Empire. Initially, the British company was created with the aim of directly competing with the dominance exercised by Portugal and the Netherlands regarding the control of merchandise flows towards Europe, mainly from Asia. These same countries were the pioneers in the colonization of new lands and the exploitation of these resources. To illustrate, the impact of the East India Company was so significant that, for over 2 centuries, it was the driving force behind the expansion of the British Empire, securing positions in Southeast Asia, India, and China. It even came to monopolize the production and distribution of some of the most consumed and produced goods in the world, including tea, cotton, and textiles, whether through diplomacy and the establishment of agreements and trade relations with other nations, or even through military force, given that the company came to possess the largest private army in the world with more than 250,000 soldiers. Accordingly, being headquartered in London, the East India Company brought many benefits to Londoners. One of the main aspects was London's positioning as a commercial hub in Europe, as the city's port became one of the busiest in the world. Furthermore, with the expansion of the empire, there was also a growing need for more investment in logistics operations, settlement maintenance, and the support of the military apparatus maintained both by the EIC and the British Crown. As a joint stock company, the EIC was dependent on a group of investors, merchants, and shareholders who controlled its operations and managed its resources, most of whom belonged to the British bourgeoisie. As a result, it did not take long for London to emerge as a financial center as the empire spread across the globe, and the abundant capital flows passing through the city ultimately forced reforms in the financial and banking system at the time. A good example was the creation of the Bank of England in 1694, which was partially influenced by the need to finance British commercial and military activities abroad. However, this chapter of British history, which lasted for 200 years, paved the way for a new model of growth, bringing broader economic benefits to Londoners. Between the 19th and 20th centuries, the city underwent a significant transformation, particularly with the rise of the stock exchange and the consolidation of London as an international financial hub. This development was crucial as it enabled the raising of capital and investment for various sectors of the economy, such as industry during the early industrial revolutions, allowing for financing in infrastructure construction and the exploitation of raw materials like coal and iron. Subsequently, it is worth noting that the First and Second World Wars significantly weakened the economic and political power of the British Empire, especially with the rise of the US dollar and the partial decline of the pound as a global currency, which boosted the American stock market and investment landscape. Yet, this did not mark the end of London as a magnet for businesses and enterprises, as the British government sought alternatives to circumvent the economic crisis and revive the banking system despite the weakened pound. One of the main measures was the deregulation of the financial system in the second half of the 20th century, offering more freedom to banks and removing international restrictions on deposits, credit transactions, and currency movements. As a result, several English and American banks and institutions sought to deposit considerable volumes of US dollars in the United Kingdom, as the country's banks were not subject to the restrictions imposed by Washington or the British government. This made London an unregulated financial center for dollar transactions, where companies and banks could deposit their reserves or take out loans without being subject to US jurisdiction, while simultaneously injecting capital into the British financial system. As this exchange of benefits progressed, foreign companies began to approach the London Stock Exchange, revitalizing the country's stock market in the post-World War II era. To illustrate, the London Stock Exchange gained popularity as an alternative to the New York Stock Exchange, and at one point even surpassed the American market. Today, the British capital handles more than 40% of the world's foreign stock trading and conducts over 30% of global currency exchanges. This raises the question, why is London in crisis? Thus, a combination of historical factors involving responsible market management, pragmatic and flexible policies largely contributed to London's success as a global city, making it a prime destination for businesses, companies, and people across Europe. For decades, it offered strong infrastructure, a stable economic environment, and a multicultural, welcoming atmosphere. It is no surprise that it became the largest city in the United Kingdom and the third largest in Europe, accounting for up to a quarter of the British GDP. Nonetheless, this seemingly prosperous climate appears to have frozen in recent years, something unsurprising given that the UK's GDP has been stagnant for 2 years, growing by only 0.3% in 2023 and recording a much lower than expected performance at the end of 2024 at just 1.4%. Nevertheless, London's problem runs deeper, with its residents experiencing a decline in quality of life, exacerbated by the severe housing crisis the city is facing. The average rent price has reached a record high of £2,695 per month, an amount that accounts for more than half of the capital's average income, which stands at just over £3,600. Thus, more than 183,000 Londoners are currently homeless and living in temporary accommodations. This, in a way, opens the door to a concerning social crisis in the future, as without affordable housing and with rental costs reaching unprecedented levels, it is natural for families to have less disposable income and consequently see a decline in their standard of living. To put things into context, London's housing crisis has its roots in the 1980s, when the British government depleted its stock of social housing at reduced prices, but failed to maintain the same levels of affordable construction in the following years, while the capital's population was rapidly growing. Data reveals a 30.8% increase in the number of people living in the British capital between 1981 and 2022, reaching 9 million inhabitants. Yet, social housing construction did not follow the same trend, and by 2024, London saw an 88% reduction in the number of affordable homes being built. This is a major issue for the city, where more than 335,000 Londoners are currently waiting for access to housing. On this premise, with a housing deficit that has lasted for 25 years, it is natural that the lack of available homes on the market drives property overvaluation. It is not difficult to imagine that London is among the most expensive places to live today, with the average house in the city costing around £600,000. Thus, it is no surprise that London accounts for approximately 25% of all households in England waiting for social housing, with 1 in every 50 residents living in temporary accommodations. Subsequently, without effective affordable housing policies and a coordinated effort to curb speculation, social inequality remains a pressing issue for Londoners. Currently, the city faces extreme disparities, where the poorest half of London's families own just 4% of the city's wealth, while the richest 10% control more than 60%. This crisis also contributes to rising crime rates, with 1 in 4 people living in the capital reporting having been attacked or threatened with violence in the past 5 years. Additionally, other crimes such as pickpocketing and shoplifting have increased by 38% and 48% respectively between 2023 and 2024, followed by more violent offenses involving knife attacks, which became 54% more frequent between 2016 and 2023. Beyond the socioeconomic aspect, London's chaotic environment is affecting its status as Europe's financial center, with the city losing this position to Paris in 2022. Although several factors contribute to this issue, Brexit has been the most notable. While the UK was a member of the European Union, for example, British and European companies moved freely between markets without excessive bureaucratic costs, and many chose London for its efficient financial infrastructure. After Brexit, with London's economy shrinking by more than £30 billion, the landscape changed dramatically. Major corporations such as BHP Group, CRH, and ARM Holdings moved their listings to the United States, making the London Stock Exchange less relevant compared to other markets such as Paris. Parallel to Brexit, London's decline in the stock market has been occurring since the 1990s. In 1990, UK stocks accounted for 11% of the MSCI World Benchmark, an index used by fund managers to assess whether an investment fund is outperforming or lagging behind the market, while also tracking the global stock market performance of developed countries. At the time, the UK had 3 stocks ranked in the global top 15 by market capitalization. Still, by 2023, the UK stock market represented only 4% of the global stock index, with Shell, the largest UK stock, ranking just 38th in global market value. Therefore, over the past 4 centuries, London has risen as a leading city in development, opportunity, and growth potential, surpassing many other European capitals in several aspects. However, the economic and social crisis that has shaken the UK for the past 3 years is also damaging London's standing in this regard, causing the city to lose its position as Europe's top financial hub, leading to capital flight and a loss of prestige. Thus, without a strategy to revitalize the economy, such as fiscal reforms, incentives for innovation, and infrastructure improvements, London may continue to lose ground on the international stage and become less competitive. Thank you so much for watching this video. If you can, drop a comment below with the next topic you'd like to see on the channel. Don't forget to like the video, subscribe, and share it with your friends. Thanks again for your support, and see you in the next video.